Where right now a number you've never seen is quietly influencing your life. It's not your skills, your effort, or your ambition. It's a number one that can affect whether you get a loan, rent an apartment, buy a car, or even pay more for the same thing someone else gets cheaper. This number is woven into the fabric of modern life, often unnoticed but always present. It's a silent force, shaping opportunities and outcomes in ways most people never realize. As we begin this journey, let's uncover what this number is and why it matters so much. That mysterious number is your credit score. At its core, a credit score isn't magic, it's a behavioral record. It's a system built to answer one fundamental question. If you borrow money, how likely are you to pay it back? This score is calculated based on your financial actions, not your personality or intentions. It's a reflection of your habits with borrowed money, and it's used by lenders, landlords, and even employers to make decisions about your reliability. Understanding this number is the first step to understanding how it shapes your life. Credit scores didn't always exist. In the past, lending was personal, based on trust, reputation, and face-to-face judgment. Decisions were made by knowing someone's character and history, but as economies grew and became more complex, those personal judgments had to be standardized. People became data points. Trust became automated. Today, your credit score is the system's way of measuring trust, using numbers instead of words. As economies expanded, the need for standardized decisions grew. No longer could lenders rely solely on personal relationships or reputation. Instead, they needed a system that could quickly and fairly assess risk for anyone, anywhere. The credit score emerged as a solution, a way to turn trust into a measurable, repeatable process. This shift changed how money moved and who could access it, making financial decisions more objective but also more impersonal. Today, your credit score is shaped by a few key behaviors. These include whether you pay bills on time, how much of your available credit you use, how long you've been using credit, the types of credit you've handled, and how often you apply for new credit. Each action sends a signal to the system, helping it build a picture of your reliability. The more consistent and responsible your behavior, the stronger your score becomes. Every financial action you take sends a signal. Paying late suggests risk. Maxing out cards suggests financial strain. Long-term consistency builds trust slowly but strongly, like layers forming over time. The system doesn't judge your character, it simply records your actions and reacts accordingly. These signals accumulate, creating a history that lenders use to decide your fate. Long-term consistency is the foundation of a strong credit score. Each on-time payment, each responsible use of credit adds another layer to your financial reputation. Over time, these layers create a solid foundation that lenders trust. It's not about perfection, it's about steady, reliable behavior. The system rewards those who consistently demonstrate responsibility with borrowed money. Imagine two people with identical jobs and income. One has strong credit habits, the other has made repeated small mistakes. They apply for the same loan and walk out with completely different realities. One pays less over time while the other pays more for the same money. The difference isn't their character, but their history. The system reacts to what they've done, not who they are. Credit scores don't judge who you are, they track what you repeatedly do with borrowed money. The system is blind to personality, ambition, or effort. It only sees patterns, habits, and consistency. This approach can feel impersonal, but it's designed to be fair and objective. Your history is your reputation in the world of finance. Consistency is the single most important factor in building a strong credit score. The system rewards those who show steady, reliable behavior over time. Each responsible action adds to your financial reputation, making it easier to access loans, rent apartments, and buy cars at better rates. In modern finance, trust isn't spoken, it's calculated. Today's financial world, trust is no longer a handshake or a promise. It's a calculation based on numbers and data. Your credit score is the system's way of measuring trust, using your history as evidence. This shift has made financial decisions faster and more objective, but it also means that every action counts. Trust is built layer by layer through consistent behavior. At silent number, your credit score may shape more of your future than you realize. It influences not just loans and purchases, but also your ability to rent, your insurance rates, and sometimes even job opportunities. The impact is broad and often invisible, affecting decisions and outcomes in ways that aren't always obvious. Understanding this hidden influence is crucial to navigating modern life. Credit scores matter because they are used everywhere. From banks to landlords, from car dealerships to insurance companies, this number is a universal language of trust. It's a shortcut for decision makers, allowing them to quickly assess risk and reliability. The higher your score, the more opportunities you have, and the better the terms you receive. Credit score is made up of several components. Payment history, credit utilization, length of credit history, types of credit, and new credit inquiries all play a role. Each component reflects a different aspect of your financial behavior. Together, they create a picture of your reliability and risk. Understanding these parts helps you know where to focus your efforts. Payment history is the most important factor in your credit score. It shows whether you pay your bills on time, and it's the strongest signal of reliability. Late payments, missed payments, and defaults all hurt your score. Consistent, on-time payments build trust and improve your reputation with lenders. This habit is the foundation of a strong score. Credit utilization measures how much of your available credit you use. High utilization suggests financial strain and risk, while low utilization indicates responsible management. Keeping your credit usage below 30% is generally recommended. This ratio is a key signal to lenders, showing whether you're living within your means or stretching your finances. The length of your credit history matters. The longer you've been using credit responsibly, the stronger your score becomes. This component rewards patience and consistency. It's not about how much credit you have, but how long you've managed it well. Over time, a solid history builds trust and opens doors to better opportunities. Handling different types of credit, such as credit cards, loans, and mortgages, shows versatility and responsibility. Lenders like to see a mix, as it suggests you can manage various financial obligations. However, it's important to only take on credit you can handle. A balanced mix managed well strengthens your score. Applying for new credit too often can signal risk. Each application creates a hard inquiry on your report, which can temporarily lower your score. Lenders may see frequent applications as a sign of financial instability. It's best to apply for new credit only when necessary and to space out your requests. Lenders watch for specific signals: on-time payments, low credit utilization, long history, diverse credit types, and infrequent new applications. Each signal helps them assess your reliability and risk. By understanding what lenders look for, you can tailor your behavior to build a stronger score and unlock better opportunities. Late payments are a red flag for lenders. They suggest you may struggle to meet financial obligations, increasing your perceived risk. Even one missed payment can have a lasting impact on your score. Staying on top of due dates and making payments promptly is essential for maintaining a strong credit profile. Maxing out credit cards signals financial strain. Lenders see high utilization as a sign you may be living beyond your means. This behavior can quickly lower your score and limit your access to new credit. Keeping balances low and paying off cards regularly shows responsibility and strengthens your financial reputation. Trust is built slowly through consistent actions. Each responsible payment, each careful use of credit adds another layer to your reputation. Over time, these layers create a foundation that lenders rely on. It's not about quick fixes, it's about steady progress and reliability. Picture two people with identical jobs and income. One has strong credit habits, the other has made repeated small mistakes. They apply for the same loan and walk out with completely different realities. One pays less over time while the other pays more for the same money. The difference isn't their character, but their history. The system reacts to what they've done, not who they are. The credit system reacts to history, not personality. It rewards consistent, responsible behavior and penalizes risky actions. This approach ensures fairness and objectivity, but it can feel impersonal. Understanding how the system works helps you navigate its rules and make choices that benefit your financial future. Credit scores don't measure ambition, effort, or personality. They measure actions, what you do with borrowed money. This focus on behavior ensures that everyone is judged by the same standards. Your score is a reflection of your habits, not your dreams or intentions. The system rewards consistency above all. Steady, reliable behavior leads to better scores and more opportunities. Each responsible action adds to your reputation, making it easier to access loans, rent apartments, and buy cars at better rates. In modern finance, trust isn't spoken, it's calculated. Trust in modern finance is calculated, not spoken. The system uses your history as evidence, turning actions into numbers. This shift has made financial decisions faster and more objective, but it also means that every action counts. Trust is built layer by layer through consistent behavior. Your credit score shapes more of your future than you realize. It influences not just loans and purchases, but also your ability to rent, your insurance rates, and sometimes even job opportunities. The impact is broad and often invisible, affecting decisions and outcomes in ways that aren't always obvious. Understanding this hidden influence is crucial to navigating modern life. Strong credit score opens doors to better opportunities and lower costs. You can access loans with lower interest rates, rent apartments more easily, and qualify for better insurance premiums. Conversely, a weak score can make life more expensive and limit your options. The difference can add up to thousands of dollars over time. Credit scores are a universal language of trust in the financial world. Banks, landlords, and insurers all use this number to make decisions quickly and objectively. The higher your score, the more opportunities you have and the better the terms you receive. It's a shortcut for decision makers, allowing them to assess risk at a glance. Building a strong credit score takes time and effort. Focus on paying bills on time, keeping credit utilization low, maintaining a long history, handling different types of credit responsibly, and applying for new credit only when necessary. Each action adds to your reputation and strengthens your score. Avoiding common mistakes is key to maintaining a strong score. Late payments, maxed out cards, frequent applications, and neglecting your credit history can all hurt your reputation. Stay mindful of your actions and make choices that build trust over time. Data plays a central role in credit scores. Every action is recorded, analyzed, and turned into a number. This data-driven approach ensures fairness and objectivity, but it also means that every detail matters. Understanding how your data is used helps you make smarter financial choices. Trust is now automated. Instead of personal relationships, lenders rely on numbers and algorithms. This shift has made financial decisions faster and more objective, but it also means that every action counts. Trust is built layer by layer through consistent behavior. Navigating the credit system requires understanding its rules and signals. By focusing on responsible behavior and avoiding risky actions, you can build a strong score and unlock better opportunities. The system rewards consistency and reliability, so make choices that reflect your best habits. Consistency is the foundation of a strong credit score. Each responsible action adds to your reputation, making it easier to access loans, rent apartments, and buy cars at better rates. In modern finance, trust isn't spoken, it's calculated. As technology advances, credit scores may become even more important. New data sources, algorithms, and systems will continue to shape how trust is measured and rewarded. Staying informed and adapting to changes will help you maintain a strong reputation and access the best opportunities. Understanding your credit score empowers you to make better financial decisions. By focusing on responsible behavior and avoiding mistakes, you can build a strong reputation and unlock new opportunities. Knowledge is power, use it to shape your financial future. At Silent Number, your credit score may shape more of your future than you realize. It influences not just loans and purchases but also your ability to rent, your insurance rates, and sometimes even job opportunities. The impact is broad and often invisible, affecting decisions and outcomes in ways that aren't always obvious. You can make the credit system work for you by understanding its rules and focusing on consistent, responsible behavior. Pay bills on time, keep credit utilization low, maintain a long history, and avoid unnecessary applications. Each action builds your reputation and strengthens your score. Your credit score is your financial reputation. It's built over time through consistent actions and responsible behavior. Lenders, landlords, and insurers all use this number to make decisions about your reliability. Protecting and improving your score is essential for accessing the best opportunities. Strong credit score unlocks opportunities and lowers costs. You can access loans with better rates, rent apartments more easily, and qualify for better insurance premiums. The difference can add up to thousands of dollars over time, making your score one of the most important numbers in your life. Consistency is the key to success in the credit system. Each responsible action adds to your reputation, making it easier to access loans, rent apartments, and buy cars at better rates. In modern finance, trust isn't spoken, it's calculated. Make choices that reflect your best habits and build a strong future. Your credit score is a silent number, quietly shaping your life and future. It's not about who you are, but what you do with borrowed money. By understanding the system and focusing on consistent, responsible behavior, you can build a strong reputation and unlock the best opportunities. In the world of modern finance, trust is calculated and your actions are the evidence.